how can policy reforms and innovative financing unlock this greater private sector participation in emerging markets while ensure sustainable, large-scale impact? And what did the IFC do in the past to help its clients and enact such reforms? And how can we reach to the $40 billion?
No, thank you very much. It's such a pleasure to be here. I will just illustrate what I say by the stories, our story here in Dubai. 4 years ago, we were around $200 million. Today, we are $2.3 billion of investment of UAE outside in the south. How did we achieve that in 3 years in such a short time? What we did first is seize the opportunity that were offered to low-income countries to receive investment from a country which has a tradition of working with a country in the south, which is ready to take more risk, and which is also ready to take make investment in sectors which were not usual investment. Today, the largest investor in renewable in Africa is a UAE company. Mm-hmm. In Central America, one of the largest suppliers in renewable energy is a UAE company. And we were very honored to do it with the UAE companies by doing what? By using our footprint on the ground to push for policy reform in some countries. We had at some point something called scaling solar in Africa, which was aiming at simplifying the contract. It was taking a lot of time for companies to be able to complete the process for contracting for investment in solar. It was not standardized. It was a lot of bureaucracy, and it was actually chasing investors out. So what we did is that we helped countries to simplify their processes, to make it regional, and to bring in investors. Second thing that we are doing more and more is to use better our balance sheet. Mm-hmm. If we take historically when our institution was built in the 50s, in 1956, 10 years after the Bretton Woods, we had at that time a shortage of liquidity for the private sector in emerging countries. Mm-hmm. Actually, the word emerging countries is coming from IFC. And at that time, our objective was to bring as much possible liquidity to companies and finance them. Fast forward, MIGA was created in the World Bank Group because we understood that there were political risks. And today, we realize that our balance sheet is not sufficient to face all the needs of the developing countries. So we need to pair with UAE, to pair with the GCC, the Gulf countries, and other countries which have sovereign fund. They risk their investment and channel it in countries which need it. That's our story in Uzbekistan. That's our story in Africa. That's our story now more and more in Eastern Europe, and we would like to attract you now in Latin America.
How do you change reform in countries? How do you change policies in governments that's more rigid, more maybe not open to exchange of that policies?
If I take my own experience, having been on the other side of the table, I think I understand the complexity. Some of us has been on both sides of the table, and allows you to calibrate a little bit the pace of reform. I think that the evolution that we have seen in institutions like ours is after more people with our background who understand what sequencing means, what are the trade-offs that we need to make, how you can make policy reform while at the same time understanding the political economy. It requires that you have somehow a win-win solution, which take into account three things to my experience. Politics is local. Yep. Okay, when you go to an MP and you say, this reform will be taken, but it will be good for the country, and his own constituency is losing thousands of jobs, that person doesn't listen to you. So you have to understand that politics is also local. Secondly, you need to have short-term result. The third is to be able to create a momentum whereby it's not only about this particular reform, but a set of measures that will improve and compensate for the losses that some of the group in the society will have.
Despite the momentum behind the South-South cooperation, there is still, we face, Brother Makhtar, more currency volatility, more fragmented capital markets, and more complex regulations that deter investments. Here in the UAE, for example, we worked on to create an open and more investment-friendly environment, but these challenges require coordinated regional and global solutions. So what urgent reforms are needed to overcome regulatory barriers and fragmented capital markets, and how can IFC contribute in building more seamless cross-border investment environment?
So what we are doing now is that we are using blended finance. In the past, you had philanthropy, you have government, and you have private sector, where each of them doing their things and not really talking to each other. Now, more and more people realize from the philanthropy of the government that to have the best effect is to blend these resources. So the big themes, and we're talking many times about it, is blended finance. How does it work? Today, for instance, if you want to de-risk investment in some country where the exchange rate is volatile and misaligned, today you need to have some resources that are available to address that challenge. So we are using more and more the blended finance to be able to offset that risk that the private sector is facing. The second important risk that the private sector is facing is, in a lot of these countries, the capital market is not deep enough. So you don't have enough liquidity in local currency. So we are trying to bring some new innovative instrument. For instance, recently in Nigeria, we knew that the local bank had a lot of naira available, but didn't have a lot of dollar available. Yep. So we provided a loan in dollar, mop in part of the liquidity in naira, and were able to do investment in local currency. We offset the exchange rate risk that are faced some investors. So we need to play with this element. But in the long run, misalignment of the exchange rate or things like that can be only addressed with right policies, well sequenced, and we need some time to be patient and understand that it requires some sequencing and to provide enough blended finance for this transition to happen well. And you see, this is here my call. My call is that a lot of countries are giving grant money separately. And I will make a call for using more of that grant money to be used to de-risk investment for the private sector. Because as a whole, for the society, it helps a lot country to reach the economic goal than if you are financing it separately through a private sector investment directly and grant. We have here one of our clients. We've been working with them on the same way in the energy sector, in the digital sector, and that to make a huge difference to have this blended finance to support them.
Makhtar, there is the South-South. So the South-South had a lot of countries in it. Where are the countries do you see, not countries that you see, that's going to be high potential in financing and your kind of as well IFC? Where should we focus on?
I think that infrastructure, logistics, and energy will become a very important source of investment in countries. As we go, regardless of what is happening in the geopolitics, the local, the regional value chain will need to be strengthened to be able to have a better transformation of the raw materials that are produced in some countries. And for that, there are some fundamentals. You need to have electricity in quantity sufficient. That's why the World Bank Group has launched an initiative in Africa, for instance, to connect 300 million people to electricity. And UAE is very active. Actually, I was in the panel with UAE investors recently to see what we can do together. The second element is everything which is related to infrastructure. And we have DP World,
yes,
which is investing in ports in some part of the world. Air transport, we have here in the GCC, in Abu Dhabi and in Dubai, one of the largest companies in the world. So how to bring those companies now to take equity in some of these local companies which are not strong enough to be able to do it. So what we would like to do in IFC, we will be shifting more and more and we're taking more and more equity. We are doing debt, less equity. We are shifting more and more towards equity. Equity is riskier, as you know, is more volatile, and so forth. So we are building at the same time a frontier opportunity fund. We will help us a little bit mitigate the risk attached to investing in equity in some of these geographies. And we believe that by us investing in equity in some of these companies, we'll be able to increase the ability to access the capital market. Lastly, we are seeing more and more institutional investors in country trying to see how they make investment which are productive investment and which are investment which help financing the economy. And those sovereign fund or those institutional investors like to have IFC investing in those places. And lastly, I'm talking to my friends of IMF. When they go to a country and they say, we need to make a reform in the banking sector, they're doing what they have to do, but it's not their job to tell us how to tell the country how to do this particular privatization of a bank, of recapitalization of the bank. So we are working with them. So whenever they identify the need to recapitalize banks following FSAP or something like that, we can talk with this bank and recapitalizing them, financing them, and helping them to bring some financial stability.
The sovereign wealth funds, particularly here in the GCC, we have become major players in global development finance. And these funds really hold an immense potential to shape the investment landscape in emerging markets, especially with aligned sustainable and long-term impact goals. And the UAE's sovereign wealth funds, for example, we manage more than $2 trillion worth of investment, leading the GCC in terms of AUM. How can sovereign wealth funds be leveraged more effectively to drive sustainable investment in global south? And the role should be multilateral institutions such as IFC play in ensuring their capital aligns with the long-term development goals.
The GCC country in general have managed their resources in a very impressive way, extraordinary way, by having sovereign following investing in very good assets, managed very professionally, and we have been taking assets a lot in OECD countries. Yeah. I think that now the opportunity of assets which are available with a high level of return is becoming less and less important for sovereign fund. So what I heard from talking to the sovereign wealth fund is that they want to look at area and countries which are riskier in terms of things, but which might have a higher return and being able to keep them the level of returns that they're expecting. So that's why we are using now our balance sheet to de-risk some of these investments that will be attracting more of the sovereign fund and be able to do it. I have the Minister Rania here. We have been working, for instance, with Egypt, which have developed a big asset monetization program, which is quite an impressive way of thinking about it. You've been very active in that effort, and we are very active in that effort. This is a good example of how we can use the balance sheet of IFC in some of these transactions to de-risk some of the investment and attract the sovereign fund. And we can multiply that example because that example was so interesting for other African countries that some of them are now trying to replicate it in another ecosystem. And we are seeing also the same movement and the same dynamics in Central Europe where people want to monetize some of the important assets that they have on their balance sheet.
Yep. You're working with the right person. Her Excellency Rania Al-Mishat is a great person. And I always say Egypt is a gateway to Africa.
Yeah.
So from Egypt, where are you going to go next?
Oh, from Egypt you can go north and you can go south. So that's what is interesting in the thing. Yeah. Let me tell you some opportunities that we are seeing. We know that people are talking more and more about exporting renewable energy from Africa to Europe. And I think that
grid connection as well.
The grid connection. Yep. I think that we should seize that opportunity and think about it very carefully because it can give. But if we develop a good interconnection in Africa, it means that a country like Egypt will not export what they're producing as renewable energy, but it can be used also as a production of the rest of the continent and be a gateway to export it. I think that also Egypt has 17 submarine cable on digital which are converging there. It's a good gateway also to be able to increase the digitalization of the African continent. I'm talking about Africa because I know that there are a lot of interest in it. But the same principle is applied in the north. And if you look at Uzbekistan, which is a large client, and other country in the stands, we are seeing a lot of interest. We are seeing also interest in transition countries. Yeah. We are seeing like Serbia, like Kosovo, and like other countries.
Like Iraq.
Yeah, like Iraq, which is also one of our clients. And we would like to move more and more in that direction. But there is also a place where I would like to attract you more is Latin America.
Wow.
Because when I talk to investors, they tell me, Latin America from here is a bit too far. And particularly when we talk about some of the transformation. For instance, we've been investing a lot in the south, in the south, in Chile, and now hopefully in Argentina. Brazil is one of the largest portfolios that we have. Yeah. So there is a lot of opportunity in that part of the world, and we would like, next time I'm sitting here, we would like to have a conversation. Actually, as I inform you, I have asking our Vice President for Europe of Latin America to come next week here and sit with all of you to see opportunities of investment in those parts of the world that we can facilitate.
Thank you.
Thank you. Thank you.